do you think is going to drive the next year of growth as we come out of a pandemic but are facing all of these macroeconomic headwinds?
Well, thanks so much for having me, Emily. And first of all, I'm really proud of our results. We saw accelerated growth in the last year, ending the year growing revenue at 32%. And we see a lot of momentum coming into the new year on the back of really strong performance in our enterprise and mid-market segments, with customers spending over $1 million in ARR with us growing 65%, and customers spending over 100K growing 39%. The macro has been really challenging over the last couple of years, and that continues. If you had asked me 5 years ago, did I think I'd be dealing with a new crisis almost every quarter as a CEO? I wouldn't have. I would have thought that was a crazy question, and now here we are. I will say that in the macro environment, we are not seeing a change in what so far is a pretty strong buying signal, because a lot of our long-term tailwinds are still in play. We see customers adopting the cloud. We see DevOps transformation happening all over, digital acceleration in particular still going on. It's not just a COVID thing. As companies realize that the primary way they're going to engage with their customers is through a digital experience. And increasingly, we're seeing inflation and some of the broader macro uncertainty. We can talk about Europe. We're seeing that as a potential driver for increased appetite in automation, which has been a big part of our platform.
What are the global trends that stand out to you? Because in general, it certainly seems like we're seeing a reset on big tech, on enterprise software. And I wonder if this is something that's going to continue for the foreseeable future, or if we get back to the multiples that so many tech investors had gotten used to.
Well, we're definitely seeing some, normalization. You had some multiples that were very, very high and hard to rationalize. And then you had some companies that were not playing in the same range. What I would tell you is every company is becoming a software company. That's a reality. So I don't think software is going away anytime soon. And I do think that investors are going to continue to look for, a path to profitability. And, we were thrilled to share with our investors this week that we intend to be profitable by FY24, that, we're going to continue to gain operating leverage as the company scales. And we see that as, a way to become a true durable grower from a broader perspective. But I think, if you look at what's going on in the macro, one thing that is certain is that the way customers and the way employees work has changed. It's a lot more interrupt work, unpredictable, unstructured work coming at employees now. And some of the more traditional platforms, ticketing queues, et cetera, don't serve that type of work very well. PagerDuty is designed for technical crises to start, incidents, and increasingly we're seeing it be used for crisis management, which, is unfortunately becoming a really important practice in most companies today.
So what do you think this will all mean for PagerDuty's stock? I mean, obviously we've seen the stock under pressure despite these strong results. What's next? Quickly.
Well, you know me, I'm a long game player. I've been at the company for 6 years, so you're going to have to carry me out in a box. And I actually have a lot of confidence in both the team and the company. And we have a very sticky customer base. Our gross retention has been consistently above 95%. Net dollar retention's been above 120%. We expect to keep that pace going. So I actually think there's a lot of upside and growth. And we're very focused on our purpose and our mission to revolutionize operations. And we think this is what modern companies need. And frankly, if you look at what's going on in the backdrop, that remains true. So I feel good about the direction we're headed.